All right, good afternoon, everyone. Welcome to today's webinar, 3 techniques to help you capture trades of a lifetime. Well, I say good afternoon. It is 2 o'clock here on the East Coast, 11 o'clock in the West. What is it? 5 o'clock over in the UK. So no matter where you're joining us from, thank you guys for being here today. I do want to do a quick sound check just to make sure everybody can hear me okay. Those of you joining us via GoToMeeting, if you don't mind, just typing something in just to make sure excuse me, that you can hear me. There we go. Glenn says yes. Paul says Winnipeg, it's 1 degree. Paul. Pablo says good. George says I hear you. Paul says yes. All right, fantastic. Well, welcome everybody. Glad you guys took time out of your day to join me here today. My name is Jerry D'Ambrosio. I'm the manager of educational content with VectorVest, and I am just one part of our education department. You know, our education department is really broken up into, I guess you would say, the different types of investors. We have an options uh, faction, if you will, of our education department. Then we have a retirement section of our education department. And then we have, where I'm heavily involved in, our swing trading, uh, you know, segment of our education team. So I'm really heavily involved in a lot of our swing trading coaching groups and swing trading courses, things like that. And this webinar, is along those same lines. My promise to you is that by learning what I'll show you today, you'll see how you can use technical analysis to help anticipate what is likely to happen in the future. Okay, so this is not your retirement-minded investment approach. This is for maybe the money that you have set aside to trade a little bit more actively, to swing trade with. So we're going to talk about technical analysis today in short-term trading. So if you're interested in that, great, you're in the right place. If you've been doing it a while, just kind of want to brush up, fantastic. Now, if you guys stay with me to the end, I will share with you a copy of today's slides. Just somebody remind me at the end. We're going to be together for about an hour, so at about 50 minutes from now, just somebody say, hey, Jerry, don't forget the slides, and I'll put them in the handout section of your GoToMeeting control panel. Okay, just so again, somebody remind me at the very end. Now I've worked with VectorVest. I've worked at VectorVest now for 15 years. Worked with a lot of traders over the years. We used to go to money shows and trade shows. We used to do a lot more traveling back in the day, right? Um, and I've spoken to a lot of traders over the years, and they always used to tell me some of the issues and problems that they have when it comes to finding trades, short-term trades, and just using technical analysis in general for trading. They felt like the market was always a crapshoot. They were comfortable with their fundamental valuation and a little bit more of a buy and hold approach. They felt comfortable in that analysis that they've done and that stock selection for that type of an investment or portfolio. But for their swing trading portfolio, they always felt like market's so up and down, I can't really catch it at the right time, and I'm not really sure how to use all these indicators. They've just felt like they didn't know everything when it comes to trading, so um, you know, they just gave up. They would go back to their fundamental valuations, core holdings, longer term holdings, looking at things like earnings and earnings growth and sales growth and price to value, making sure their investments were undervalued. Um, they also used to say that there's just too many indicators with all these funky names, so they just say forget it. Plus, when they do decide to, dive into technical analysis, they're just spending just spending their time going through hundreds and hundreds and hundreds of charts. I've spoken to, traders who go through, a couple of hundred charts a day looking for trading candidates. You can imagine if you keep doing that every single day, you're going to get frustrated. You're going to give up. Okay? I mean, it's just human nature. You can't just go through your entire day looking for stocks. You want easier ways to do that, right? So what we want to do is we want to put probability on our side. You don't want it to be a crapshoot anymore. You're not going to know everything. We also want to stack the deck in our favor. You're not going to know everything when it comes to trading right away. If you're kind of new, take your time. Let's learn a couple of indicators to start with, and really the application of those indicators, how to use them, and then you can grow from there. So you will know though what you're doing, you'll know exactly what you need to know to be successful. Plus, you want to find trades quickly instead of looking at hundreds and hundreds of charts every day. So the thing that I discovered is that there are three areas that traders need to focus on right out of the gate to be successful. The first is when, and here is where we're going to talk about the different types of market environments, I guess you will, if you will, that you'll encounter. Okay. Um, Now, we'll then talk about what are the ideal indicators to use in each of those market situations. So we'll talk about three different situations that you might encounter, three different market environments. Okay. And then I'll teach you here which indicator to use in each of those markets. I'm not going to teach you five for each market, right? I'm going to teach you one. I'm going to show you one indicator, and it's really ideally suited for that type of market situation. You'll understand more in a moment. And then finally, how are we going to find our trades? There is the one by one method. I told you that I know traders that go through hundreds of charts, every day almost. Um, that's the one by one method. There are some faster ways that we'll talk about. So with so many people doing shorter term trading nowadays, I think 2020, I read somewhere that last year had the most new trading accounts opened. A lot of new investors, a lot of younger investors that are really into the shorter term, more speculative type of investment. That's not necessarily what we're talking about, but shorter term trading in general. Um, so the market can do one of three things. It can trend. This is a really comfortable environment for everybody. Everybody loves a trending market. I mean, we were in a nice uptrending market there for a while. Things have changed quite a bit over the last couple of weeks, but we were in a nice uptrending market. Okay, traders love it, investors love it. Everybody loves a nice uptrending market, higher highs and higher lows. Um, Then you get into a situation where the market is no longer trending. It's no longer hitting higher highs or higher lows. It maybe moving sideways or channeling. Traders don't mind this type of market. They'll play the market both sides, but investors don't like this type of market because there's no true trend, right? And then finally, the market can hit an extremely oversold situation, really oversold situation like we saw in March of 2020, in December of 2018. And there are indicators and ways to identify all these types of markets. So for a trending market, we're looking at the VectorVest composite. This is our broad market index. You can think of it like the S&P or the Dow or the NASDAQ or the Russell. This is our broad market index that tracks 8,000 stocks. So we look at this to help us determine right out of the gate, is the market trending? Is it hitting higher highs? Is it hitting higher lows? Okay, and what our jobs are as traders, what our job is to buy stocks or add to existing positions, buy more shares of an existing position after each new higher low. Okay, so in other words, we want to be bullish only. We want to be bullish only. Why don't we want to be bearish during pullbacks in an uptrending market? Well, generally speaking, those pullbacks are rather short-lived. Okay? So we want to become defensive. We want to become defensive after each new high. Not short the market. In a downtrending market, we would look to short after each lower high, and then look to become defensive after each lower low, because those rallies in a downtrending market are rather short-lived. Rips, pullbacks in an uptrending market are generally shorter-lived. That's why you're in an uptrend. And then rallies, dead cat bounces as they're called, in a downtrending market where you're observing lower highs and lower lows. We don't want to be bullish during those time periods, with one exception. And I'll talk about that exception in a moment. So that's a nice trending market. I'm sorry, let me go back to that slide. That was February of 17 to January or February of 2018. Okay, so now 2017 is over. Here's now 2018, January of 18 to August of 18. And you can see that the market is not trending anymore. Here was the high in January at the end, all right? And then we started to hit lower highs. That rally didn't break through. It didn't establish a new high. However, we're not seeing lower lows either. Here we were seeing lower highs during this time period, but not lower lows. If we were seeing lower lows, we would have been in a downtrend. But the market's just moving sideways now. This is for 7, 8 months now in 2018. Pretty difficult environment for an investor, isn't it? If you're just buying and holding long term, man, you're frustrated. You make money, you give it back. You make money, you never really break that wall. But traders will play the market up and down as this develops. Buy off of support, buy off of support, sell off of resistance. Okay, just play the market back and forth. So that's what's known as a trader's market or a channeling market. That's how you recognize in real time. Okay, are we at a new high? If we are at a recent new high, then we're uptrending. If, however, as of the hard right edge, price is currently off of, well off of a recent high, and maybe we're seeing higher lows as well, or a level of support. You got to recognize these things in real time. In our daily color guard reports, which are free to our subscribers, it's basically a nightly video. Going through what is the market doing right now. It's nightly. Every single night we go through, okay, what did the market do today? How does that change things, if at all? All right, so that's a nice part of the VectorVest service, is you get that nightly market review and market analysis. So this is right here what's called an extremely, an oversold market, almost a major bottom. Now, same price chart at the top. Now we're into the summer of 2018. We're just kind of going from left to right here. And now we start downtrending, right? We're not channeling anymore because we're seeing lower lows and lower highs. And we get into this so bad, it gets so bad that December of 2018, then the market really got crushed there. We're looking at daily price bars, by the way. So each one of these bars is a daily bar. Man, 1, 2, 3, 4, 5, 6, 7, 8 days in a row the market fell. Add 5 to that, that's 13 with one up day during that time period. So the market is getting really hammered. And yes, it's in an extremely oversold situation. You don't really need indicators, I guess, to tell you that if the market goes down 15 of 16 days, something like that. But we have indicators that help us more empirically. When is when is the good time to buy? Now, we have 2 market indicators. Just because the market's falling, we're not going to tell you to buy. We're going to look for a reversal. The reversal in this type of situation, generally comes when the market timing indicator is below 0.60 and the buy to sell ratio is below 0.20. These are 2 market analysis indicators within our program. So MTI, when it goes below 0.6, buy to sell ratio goes below 0.2. We're really searching for a bottom because we know historically that when those indicators got to those levels, the market was kind of somewhere near a bottom. We start to search for a bottom. We look for a reversal. We don't just buy stocks because those indicators are below those levels, by the way. We wait for a rally. And the rally happened the day after Christmas, December 22nd to 26th. That is the day after Christmas. And the VVC formed what's called a one white soldier. That's a bullish candlestick reversal pattern. It's a very reliable one. And we got followed through the next day, and then that was it. We were off and running, and that's for the bottom fisher, a little bit more of the aggressive trader. Now these situations don't happen all that often, by the way. Once a year maybe. It just depends on the market. It depends on the trend. I don't think it happened in 2017 at all. I don't think it happened. Well, it did happen here in 2018. Yeah, it happened recently in March of 2020 as well. All right. So that's an extremely oversold situation. So now we are better now at being able to recognize the market just doesn't do the same thing all the time, right? It can trend, and that's great. That's real comfortable for everybody. Then it can move sideways for an extended period of time. It could be after an uptrend too. You might get some consolidation there after an uptrend, but it lasts a long time, a few months sometimes in terms of the overall market, and then the market can hit an extremely oversold situation. Okay, we're going to now talk about the different indicators to use in each of those market situations. So if the market is trending, we're going to look at the MACD. MACD stands for moving average convergence divergence. It's a trend indicator. It requires a meaningful change in trend to generate a signal. So it just makes sense. Hey, if the market's trending, let's use a trend indicator. In a sideways market, in a channeling market, if you've ever tried to use the MACD before, you probably know that it doesn't work all that well in a non-trending market. I don't expect it to work well in a non-trending market. It's not a neutral indicator, a sideways type indicator, right? Support and resistance is. We're going to look for stocks, for example, that are retracing from their own support level when the market's retracing from support. So if we're recognizing that channel and we see the VVC, for example, hitting a support level, not making a new low, falling to the same level that the VVC fell to, prior, and then retracing from that level, which is what? That's support retracement. That's bullish. We're going to look for stocks that are doing the same thing. And then finally, probably my favorite indicator, I love stochastics. This indicator identifies overbought or oversold price situations. Okay, and we're going to look to use this indicator in any type of market, honestly. For sure, if the market is coming off of a really low point and those indicators, MTI buy to sell ratio, got to below those levels, for sure look at stochastics. But I can use stochastics even in any other type of market, an uptrending market, a sideways market. You can mix and match certain indicators. I would not, though, mix and match MACD with anything else, with any other type of market. Okay, just keep it to a trending market. So here we're looking at Netflix. Again, don't worry about the time frame. Back to 2017, the market was trending. So, we have a nice uptrending stock. So we're just going to look for times when the MACD histogram bars, that's those yellow bars at the bottom, go from below zero to above zero. That indicates a meaningful change in trend. We're in an uptrending stock because we're observing higher highs and higher lows. Pull back here, creating another higher low, MACD change, good opportunity for some short-term gains there. Not every trade is going to be a winner. So now you're coming off of another higher low and you get your MACD signal. And the bearish signal, by the way, folks, the signal to sell. So we're right now talking about entering trades on a bullish MACD crossover when the histogram bars go from below zero to above zero in an overall uptrending stock in an overall uptrending market. We're going to use the bearish MACD crossover as our exit. So you can see here, we may have walked away even, broke maybe a small little loss here. So not every trade is going to be a winner. But for the most part, in an uptrending stock, you're going to have a higher likelihood of success. Buying on bullish MACD crossovers, selling on bearish MACD crossovers. Okay? Now look, I know, in this situation here, we got in, a couple of weeks off of that low point. Well, the indicator fell so far in such a short period of time that it did take a little longer. So it's a lagging indicator. I'm not saying it's a leading indicator. It's moving average based. So moving averages are lagging. Okay? But in a nice uptrending stock, you're going to get more opportunities. So if you wind up breaking even on a trade, but you're still uptrending, you get another opportunity. You buy off of a new higher low. Okay? You'll make some really good trades and you're going to likely get more winning trades than losing trades. Now here though, we're not in an uptrending environment anymore, right? Same stock, Netflix. Now the uptrend is over. How do I know the uptrend is over? Well, we got a new high here in June, pullback, higher low, great, but not a higher high. Failed to make a new high and then started to move lower. Now we're seeing lower highs here and lower lows, okay? So what we don't want to do in this lower high, lower low environment is buy on the bullish crossovers. Okay? We could short if you choose to do so, if you choose to short stocks. You can short on the bearish crossovers in a downtrend and look to cover on bullish crossovers. Because if you look to buy on the bullish crossovers in a downtrend, look at these signals. They're not, you're not improving your likelihood of a winning trade by doing that. These are dead cat bounces. I talked about this earlier. Dead cat bounces in a downtrend, I know they're tempting, but look, what's the overall trend? You got to look at the bigger picture. And I know eventually, if you keep plugging at it, right, keep buying those bullish crossovers in a downtrending market, you'll find the bottom. You'll catch it at some point. But I hope that's not the game you're trying to play, right? Um, I keep buying and losing, I keep buying and losing, but eventually I'll get the bottom, right? We don't want to do that. You know, you're accruing loss after loss. That's not the way. That's not how the way you want to trade. Okay, so just focus on using the MACD bullish crossovers in an uptrending market, in an uptrending stock. You'll improve your success and your results quite a bit. Um, Another very popular tool is to use another popular trading technique is to use support and resistance levels. One of the great things about the VectorVest tool is it has a way to automatically, draw the support and resistance lines on the chart for you. So let's take a look at what I'm talking about. Before we get too deep, what is support and resistance? Basically, a support level is a point where stock prices have stopped going down and they begin to go back up. Typically, that happens on multiple occasions. It's where demand is deemed strong enough by the investment community to push prices higher to support them from falling any further. Resistance is a point where stock prices have stopped going up and they begin to come back down. Again, this typically happens multiple times. It's where supply is deemed strong enough to push the price lower, to resist it from rising any further. And it's the ultimate crowd mentality indicator. Think about it like this. Have you ever bought a stock, you watch it go up, you just watch it go up, you watch it go up, right? But you don't sell it. Why don't you sell it? Because you think it's going to continue to go up. And then what happens? It comes crashing down eventually, and you don't sell it. But what you say to yourself is, if it ever gets back up there again, I'll sell it. Then what happens? It eventually gets back up to that level again, and what do? You and everybody else that bought it somewhere back here the first time before that real big crash, you sell it. It puts tremendous pressure on the stock's price, and it's going to begin to fall. Okay? So how do you use support and resistance in your trading? Number one, let's talk about the buying opportunities, the bullish situations. Buying opportunity number one is if you see price retracing from support. Price retracing from support. Retracing from support, retracing from support. That's bullish. For a trader, you buy when price retraces from support. Buying opportunity number two is if you see price breaking out through a resistance level, particularly on high volume. We really want high volume on a resistance breakout. Remember, we already said that there was built-in selling pressure around that resistance level based on the crowd mentality. Well, if a stock's price is able to overcome that selling pressure and bust through that resistance level, that's very bullish. That would indicate a buying opportunity. Bearish situation number one is if you see price hitting resistance and then retracing from it. Hitting resistance and retracing from it. That's bearish. If you're long a trade, you should consider exiting that trade if you see price retracing from resistance. If you're not long the trade, good opportunity to short the stocks again if you choose to do that. Bearish situation number two is if you see price breaking down through support. We don't see that on this chart, but if you're in a long trade and you see price breaking down through support, good time to sell. Good time to get out. Likely price is going to fall, to at least the next support level. So that's bearish. We're looking for short-term gains and minimal losses here. So you want to really cut your losses early. All right, so another indicator, the last indicator we'll talk about is stochastics. As with other oscillators, it helps pinpoint overbought and oversold price situations. Don't let all the squiggly lines confuse you. It's not confusing. If you want to Google stochastics to know what the formula was, how it's calculated, all that stuff, you can do that. I'm going to show you how to use the indicator. Stochastics, it's scaled from 0 to 100, and the lower end is 20. Okay, the lower end is 20. That indicates an oversold situation. Now, would you agree that when the stochastics oscillator went below 20, that you were somewhere near a good buying point? right? Now, this is an uptrending stock, by the way, right? And I said you can use stochastics in a lot of different types of market environments. Now, you may look at that pullback, right, or that pullback and say, that's not oversold. We're in an uptrend. How is that oversold? Well, look at stochastics. This is the industry standard 14.3 slow stochastics. Look at stochastics. It's telling us that it is technically in an oversold situation. So that's what's great about these indicators, is that they do a much better job of or recognizing price behavior, understanding price behavior, much better than we can with just the naked eye. So new high, pullback, oversold situation, were we somewhere near a good buying point? Absolutely. Now, just because the indicator goes below 20 doesn't mean that we go out and buy it. We wait for the indicator to cross from below 20 to above 20, below 20 to above 20. What are you noticing here? You're noticing that you're buying only a couple of days off of the new low, right? A little different than the MACD. MACD needs more of a meaningful change in trend for it to generate a signal. So using the MACD, you're getting in a little bit later, but hey, you determine how fast of a signal you want to follow. If you say, I need a meaningful change in trend, that's the type of a trader I am, a trend trader, then MACD is great. Again, in an uptrending market, it's more of a comfortable entry for you. I'm a little bit more aggressive, where if I'm in an uptrend like this and stochastics goes from below 20 to above 20, I'm willing to take the risk for the potential reward of getting in a little earlier, knowing that I'm going to keep a tight stop. I'm not going to let price go any lower than the higher swing low that I entered off of. Okay? Just again, it's just temperament and what you're comfortable with. So here is an example. So now what I'll go through here is trade entry, trade management, because this is a good example here. Abbott Labs was trending, and then all of a sudden, we got this crash in February of 2018. And look at those long upper wicks. If I'm in an uptrend, right, and I see those long upper wicks, that's not bullish, folks. Even though price got to those high levels during the session, look at where the closes were. The selling pressure at the end of these sessions really signaled a weakening in the trend, and stochastics actually showed that as well. Price moving higher, stochastics, you can see that downtrend, right? Lower highs there, so that's a bearish divergence. That also gave us a warning signal of a potential pullback, and boy, did the stock pull back, right? It pulled back, it stopped, stochastics went from below 20 to above 20. By the way, a couple of days prior, that's a bullish candlestick reversal pattern called a bullish harami, very reliable pattern. You're likely to see bullish candlestick patterns at turning points anyway, but you got follow through the next day, you got your signal, good opportunity to get back in there a couple of days off of the bottom. Now that level up there, remember the most recent swing high, that's where I like to look to take gains off the table, especially, right, if that was a point of former weakness, right? A previous selling pressure area. So price gets to that level again. If I'm in this trade long, I would hope that it breaks through, but it didn't. It stopped right at it and then pulled back, and that's essentially now a resistance retracement. You can get back in. You take your gains off the table there. You get back in at a lower price. Stock price pulls back. Stochastics goes all the way from below 20 to above 20. And this also coincided there, this little dip and then retracement. That's now support. Now, it's not an exact price point, but it's in the same zone that the stock stopped last time, right back here. So you're not only getting off a support retracement, but the stochastics going from below 20 to above 20. You get in the trade the next day. See that doji right there? That's kind of where your entry is, because you got the signal on the 4th. You enter the following day on confirmation. And then what happens? The price falls, crashes the next day. Has that happened to you before? I know it has. I'm sure it has. It's happened to us all. What have you done in the past? I'm speculating, of course, but you may have panic sold, right? Oh my goodness, I'm in the trade one day, it crashes on me the next day. I was wrong. Let me get out and just cut my loss and move on. Well, let's look at the chart, right? Price doesn't fall below this support level. It doesn't fall below this most recent swing low here. Okay? If it did, that would have been your time to then cut your loss, right? Making a new low there, breaking down through a recent a support level. But then price retraces the following day and moves higher, and you're almost at break even. And you're thinking, okay, I made the right decision. And then what happens? We get another retest of that zone, right? And remember I said back here with these long upper wicks, that's bearish in an uptrend. Well, long lower wicks are bullish in a downtrend or at support. That's called a hammer. That's a bullish candlestick reversal pattern, a very reliable one. So that long lower tail and the close near the high, that was showed us that that downside was weakening. We got followed through the next day, and you weathered two storms. Use that support level as your exit, as your floor, and were able to turn a trade that you may have taken a loss on before into a profitable trade. I don't ignore that resistance level. If I'm in this trade, look, you may have sold a few times prior, but if you held on because you were going to wait to see what price did once it reached that next resistance level, you were kind of expecting it to rise to at least that level, and it did get there, but then it retraced from it, and that's where you'll take your gain off. You'll always be able to get back in. Now, price didn't fall all the way back to the support level. Okay, actually made a higher low now. Stochastics crosses from below 20 to above 20. It makes a higher low. We enter, it rallies, and it stops right at resistance again and then retraces from it. You see that big red candle? I'm going to be honest with you. That would have been where I took my gain off the table. I know what price did afterwards, and we'll talk about what it did. But I didn't know it was going to do that when price retraced from resistance, so I take my gain off the table. The very next day, again, this probably happens sometimes, you sell and you sell at the lowest point, and the stock rises the following day, and then eventually breaks out through that resistance level. When price breaks out through resistance, that resistance level becomes support. And a lot of times what you'll see is a retest of that support level. So we saw that retest off support, and then subsequent retracement where you could have entered back into the position. Rallied it a little bit and then came all the way back down, retested support again. So that retracement off of support, which was essentially a second retracement, along with stochastics, was an entry as well if you didn't take it off of that first support retracement. Okay, now we're uptrending again. Higher high here, higher low. We got in off of another higher low. So now we're uptrending. But our next stochastics crossover, it appeared to happen off of another new high. But we get into the trade the following day, and then we were wrong. The trend didn't continue. That little pop there, establishing a new high, didn't lead to an immediate new leg in this uptrend. Fell below the swing low that you entered off of, so you take your quick little loss there and you move on. Stochastics goes back below 20 and then crosses above 20, and there's where you can re-enter. All right, so now still another higher low, barely, but another higher low, but we don't really see higher highs anymore. That high, I guess, it was an intraday high, and you can see the high marker there. But we're, basically moving sideways again here. For sure here, right? Definitely moving sideways here. You could just visually see it. So there we got a bullish stochastics crossover. And that bullish crossover, that retracement, let's see, is it at the same level compared to any level in the past? Well, yeah, one here and another one there. So that's a support level retracement as well. And then we get into the trade, and a couple of days later, the stock price comes back down. Not a new, we don't see a new high, but we see a nice hold again, right, of support, and then another retracement, so we're able to stay in the trade. Okay? So really effective, easy way to use those indicators. I would really focus on the market, though. Don't use MACD in any other type of market than a trending market. You can mix and match the others, okay? You can mix and match the others. Now what we have to know is, how are we going to find our trades, We went through a couple examples. That's kind of like a cherry picking example, right? Where you look at the charts, you go through charts one by one by one by one to try to find a handful of candidates. That's frustrating, time consuming. I don't have that kind of time. So my preferred method, honestly, is using a scan. Hey, let's filter through the list of stocks that we would normally go through one by one. Let's figure out a way to filter through that list to find stocks that meet the criteria that we're looking for, either a MACD bullish crossover or retracing from support. I'll show you that, we do have a tool that does that. And then finally, automatic alerts, getting real-time intraday alerts when, let's say, a MACD crossover happens. So you don't have to run a scan. I have some watchdogs set up where I'll show you one in a moment where I don't remember the first time when I set that up because it runs all the time. Just runs automatically, and I set up a separate email folder for the alerts to come, and I just be very, very selective and making sure I'm taking the right trades. So the one by one method is, you go into the VectorVest program, and we have an S&P 500 watch list. Okay, we have a ton of watch lists within the program, but for example, you go into the S&P 500 watch list. This is a pretty popular list of stocks that people like to trade, from. And the watch list is sorted, so the best stocks are at the top of the list. We're sorted by our VST indicator, which combines the value, safety, and timing into one individual indicator. You could see that this, the list of stocks is sorted. So we would look at the top stocks. We just graph them all. If we were in an uptrending market, what would we look for? We would look for a bullish MACD crossover as of the hard right edge of the chart, the recent date. And we go through chart after chart after chart. All right. I've gone through 50. I haven't found one yet. You're not guaranteed to find any. It's cherry picking. Within the VectorVest Premium program, we have a tool called Pro Trader. It's a tool that it's a technical analysis scanning tool. It'll find you stocks that have a MACD crossover. You can use the S&P 500 watch list if you want. It'll find stocks whose stochastics crosses from below 20 to above 20. It'll scan for stocks really, really easily. That have a support retracement if, let's say, the market is retracing from support. Okay, so it really, really quickly and easily, and I'm going to show you how quickly and easily. I'm going to go into my program here. Let's just say I wanted to find a bullish MACD crossover. Don't worry about what the market's doing, but for example, I just want to find a bullish MACD crossover. I'll go into my Pro Trader folder. There's the timestamp in our scanning tool. I'll go to MACD crossover, I'll double click, or I'll click on run search, and just like that, boom. All these stocks, as of right now, have a bullish MACD crossover compared to yesterday. Just like that, within seconds. Okay? The final way, and that's my preferred method because I like to look at charts. I honestly like to look at charts, and I do a lot of it, but I like a scan to get me there first. Because then I'll run a scan on bullish MACD crossovers, but it doesn't necessarily guarantee that, let's say, over the last 6 months, the stock has been trending higher. That's what you want to see, right? It only finds the bullish MACD crossover on that day. So you look at the charts and then you say, okay, over the last 6 months, I know every stock that I'm about to look at, it has a bullish MACD crossover, but you cherry pick the better ones, the better trending, the stronger trending stocks. Okay, so it gets you there much faster. Here, very similar in that this is called a watchdog. It's a real-time alerting tool. You set it up. I have a bullish MACD crossover on the S&P 500 set up here. This is an older slide, but what will happen is I have price and volume filters too. $5 price, 250,000 average volume, and again, I'm only looking at S&P 500 stocks. And every single day, it'll alert me of new stocks in the S&P. I don't have to run a search. I don't have to be in front of my computer. I have to have the alerts set up in a way where I'll get an email or a text message, but you just have to have the watchdog and it does all the work for you. Okay? Now, you showed up today. I'm going to take a few guesses. Do you feel like you're missing out on the current market? Or your current trading plan isn't working anymore or performing like you want it to? But you also want a better, faster way to find trades. You're realizing this is a fast-paced game here, this swing trading, and maybe doing it the one-by-one method isn't cutting it. So what you learned today is to match the market to your indicator. You want to make sure that you understand what the market's doing first, and then choose an indicator. I mean, there are other trend-based indicators. There are moving averages, just simply using that. I just wanted to give you guys one per market, okay, to really get started. You learned how to effectively use popular technical indicators, and then how to quickly and easily find trading opportunities. The big lesson, technical analysis can help anticipate future direction, and you can find some great trading opportunities, especially if you use the power of speed. Okay, so you might be wondering, I'm a swing trader, kinda. I'm interested in this game. How can I get started using technical analysis now? You have a choice. The slow way, honestly, guys, is the one-by-one method. You can do it that way. I taught you how to use the indicators. I taught you how to recognize what the market's doing. You can do it the one-by-one method. The faster way is what I'm about to really show you here. So, excuse me. The one-by-one method, you recognize what the market's doing, you put the appropriate indicator on the chart, and then you make your selections doing it that way. Using a scan, my preferred method, we have our Pro Trader tool. Oh, by the way, within the Pro Trader tool, you could search for things like moving average crossovers and ADX, RSI, DPO, Bollinger Bands, envelopes, ATR. I think that might be it. But that's a lot of different indicators that you can search for. So that's included in the Pro Trader tool as well. And then finally, the automatic alerts that you get with the Watchdog. Okay. Now, what comes included with VectorVest Real-Time or VectorVest Premium is fundamental and technical charting, market timing signals for clear entries, Pro Trader searches, the Watchdog, which gives you instant alerts, the Genius, this is a great tool, I love this tool. It's an automated portfolio manager, gives you alerts as well. Pre-built trading systems, and then of course real-time streaming data. Now normally, we sell this for $137 per month. I want to give you guys an opportunity to try it out for 30 days. If you don't have the VectorVest real-time program, the VectorVest Premium program, I want to give you an opportunity to try it out for 30 days for $9.95. Okay, let's say you're not a VectorVest subscriber. This trial is for you, $9.95 for 30 days. If you are a VectorVest subscriber, but let's say you have VectorVest end of day or VectorVest intraday data feeds. This opportunity is for you as well. Now, if you already have real time, you're probably loving real time, right? You probably took a trial to real time a while ago and now you're a subscriber. This trial isn't really for you, but what I will do for you, along with everybody else who takes out the trial, I'm going to send you a stock buying checklist. This is a little bonus for you guys who take out the trial or are already on real time. It's a stock buying checklist. This is good for those of you that like to be a little bit more hands-on with your trade history and record when you bought the stock, what stock you bought, why you bought it, when did you sell it, what were the kind of situations, did you follow all the rules that we discussed today? So this is great for those of you who like to do that. This is also 30-day money-back guarantee. This is a 30-day trial. It will automatically convert into a monthly subscription after the trial. If you don't want it to do that, give us a call. You want your money back? No questions asked. If you might want to go to back to your end of day program or your intraday version, or just cancel outright. Just give us a call. We'll give you the money back. Okay. I'm going to type in that address that you guys see at the bottom there in your chat box. Thank you, Paul. I appreciate that. Was it www.vectorvest.com/ I'm sure we could have shortened this. Capture trade. That's a lot to type. All right, I'm going to click on this send button. You guys should see that in the chat box. You can just simply click on it, and that'll bring you right to the registration page, to the order form. Whoops, let me get that out of the way. So anybody have any questions? I want to stick around for a few more minutes here. If you guys have any questions, my email address is jerryd, Jerryd, as in David, @vectorvest.com. Paul says, how many programs are there? We really have, VectorVest 7 is VectorVest 7, but we have different data feeds. So we have an end of day data feed, which doesn't update during the day. It only updates at the end of every day. Intraday, which is a 15-minute delay, and then VectorVest Real-Time here, or VectorVest Premium, which is real-time data. So 3 different data feeds, and we also have a mobile app as well. Okay. Again, my email address is jerryd, Jerryd, as in David, @vectorvest.com. Oh yeah, nobody reminded me. Well, we're kind of wrapping things up here. Yeah, so you guys will get an archive, not an archive, but just an an email with a link to view the recording. This is being recorded, so later on this evening you'll get a link to view the recording. Okay, and what I just did was I put the slides in your GoToMeeting control panel in the handout section. What's the market doing? Oh, it's still up. Still up. Dow's up 428, Nasdaq 121, S&P up 55, so the market's still up. Ahmed says, do we have to consider the market trend to enter positions? Yes, yes, absolutely. When you get this recording again, Ahmed, pay very close attention to the beginning of it, because I talk a lot about what the market's doing first and how to kind of react to whatever the market's doing, to that market situation. All right. You're welcome, Kathy. Absolutely. All right, guys. I hope you guys have a great weekend. It is Friday. Boy, what a week. Market's been brutal, brutal, brutal. I hope things turn around. You know, tonight's a nice rally. Let's see if we get follow through on Monday. That'd be awesome. Follow through on Monday might be, hopefully the sign of the bottom here, and we kind of move on from this nonsense and continue to move higher, right? Naresh says, what is a typical length of time period that we should consider? What do you mean by that? Time period, holding period, or graph span? Graph span, look at the last 6 months, maybe 6 to 9 months. Holding period just depends on when your stop takes you out. Oh, yeah, so 6 to 9 months or so, you know, if trying to assess the market, gives you a good idea if you're trending, if you're kind of moving sideways. 6 to 9 months, I think, is good. Remember, that's what the short-term situation is. We're short-term trading, all right? So we want to look at the more recent market environment to figure out what to do. Paul says, can I apply this to options? You sure can. You sure can. And that's all I'll say about that, because there's so much that goes into an option trade as opposed to just buying the stock. But you're directionally trading stocks, right? You're buying stocks that you think are going to go up based on the trend change or the indicator. Well, you just buy the call. You place another directional option, bullish option trade, whichever you feel comfortable doing. But again, a lot of different variables that go into that. Dale says, how does oil look at present? Very good. Looks very good. Oil is a buy. After hour real-time data, somebody's asking. Yes, and pre-market as well. 8 a.m. the pre-market data starts and it goes to 8 p.m. After hours 4 p.m. to 8 p.m. You get pre-market and aftermarket data for sure. Oh, good, Matthew. Awesome. David's a good friend of mine. David Silver referral, Matthew says. Thanks for good taste of VectorVest. Awesome. Yeah, David's a great guy. He's got a search in the program. I'm sure you know that. A really good one, too. Diego says, would you say that with this volatility is a good time to test this strategy? Well, if the market here, let's look at the VVC now, okay? Let's look at the VectorVest composite. This is interesting. Come on. This is the market now. This is the VVC. With today's price action, right? Just looking at 10 months, 9 months right there, just, we were trending. Then we broke down. Did we hit a lower low here? We didn't, right? Boy, that looks like a support retracement to me. Okay? So that's what we're recognizing in real time what the market's doing. We need follow through. Look, I want to see, I'm not buying today. Even though I was tempted today with this rally, I got enough powder dry in my own portfolio where I'm ready now to start looking to buy here. Look, if today was a down day, I wouldn't say that. Today's a nice rally. The VVC is going to be forming both a hammer and a bullish harami at support. If you don't follow the signals the way you're supposed to, then what are you doing? Look, you could be wrong. You could make a new low and then you just rebalance and readjust. But if you're a little bit more aggressive and you want to play this bounce off of support, I'm going to wait for follow through tomorrow. Let me see the Monday. Let me see the market go higher, and I may look for things like stochastics crossovers, crossing above 20, or a support retracement. Not quite sure. We're not really trending anymore. We're kind of moving sideways, so I wouldn't really look for a MACD, even though you're likely going to get a good signal because it's not like we've been in a 3-month downtrend. We're just pulling off of a new high, didn't establish a lower low, retracing from support. Really, I guess you can use all three indicators. I guess I would say that. But make sure there's follow through on Monday before you do that. Yeah, wait for confirmation, Paul, for sure. Diego's asking, how is the VIX? Let's go to investing.com. I always have it open. The VIX is down 7%, so that's good. Okay, that's good. So Naresh is saying, do you define the support line? Let me go to add parameter. Let me see if our VectorVest support and resistance indicator finds it. It will if we just shorten up the time frame a little bit. So if I just right click and go to settings, let me go. Yeah, just looking at the last 40 bars, you can see what that did, right? Whoops. It found that support level here. Okay, so there's our support level, just looking at, kind of the more recent price market action, last 40 bars or so. So yeah, it finds that support level. All right, guys, I had a great time today. This was an awesome session. I hope you guys enjoyed it. My email address again is jerryd@vectorvest.com. Look forward to working with you folks that take out the trial or have real time, heavily involved in the real time program. I'm a trader. I love it. So hope everybody has a good weekend and talk to everybody soon. Take care, everybody.